Welcome to Markets Now. I'm Michelle Rook along with John Heinberg with Total Farm Marketing. We ended mostly higher over in the livestock futures on Friday with the grain trade mixed. And John, let's talk a little bit about, first of all, wheat had a big up day led by HRW wheat. And most of that was due to that big bullish surprise that we got in the winter wheat category in the WASDE, right?
Very much so. I mean, that was the surprise of this report, at least according to expectations. And, seeing those numbers come in where they did, winter wheat supplies or winter wheat crop production, 100 million bushels under what the market was anticipating. Total wheat, 140 million bushels or so under what the market was anticipating. Those are big misses in that regard, especially in that market, given the positioning of the market being as heavily oversold as it was, even though we were recovering a little bit here, after that Oklahoma crop tour came through. It just still set this market up for a pretty big move. We've really seen it in the KC wheat as it's accelerating to the higher side here. And again, now next week we get the Kansas wheat tour, so we'll see if those numbers get confirmed even more so. But that was really the surprise in this report, that the North American or U.S. wheat crop is going to have some issues that may just eventually lead to some of the price advantages. I think that did spill over and at least kind of keep the corn market in check a little bit today.
Definitely. And we had big abandonment acres in the HRW areas. And so do small crops keep getting smaller, John?
I mean, that's a definite possibility here too, as producers are making those final decisions on those acres that are out there. Like I said, I'm really kind of watching to see what the Kansas wheat tour puts together here next week too. Obviously the largest winter wheat producing state in the nation is Kansas. After the numbers Oklahoma put out there about a week and a half ago, you'd expect something to be similar to that Kansas side of it. So this is a crop that again may just continue to tighten. And the other thing, it's in an area that's already dealing with short feed supplies and grain supplies anyway after last summer.
So what do you think as far as upside potential here? You mentioned the funds being short in Chicago. Do we have a lot more upside, do you think, in this wheat market? Because we've, at least in HRW, had a pretty good rally already.
Yeah, we have. We kind of pushed right back through some of those key highs. Now we got to see if we can get through those January highs. That's kind of one of those key points in any of these markets that just kind of says, hey, we're breaking through to upside momentum. So those would be the kind of key areas we got to watch over the next couple of weeks and see if we can get all three of these classes of wheat through those areas. Chicago wheat's still going to struggle because that's the one that kind of competes against the global a little bit more, at least in terms of Russian wheat prices, European wheat prices. The spread between Chicago and KC is well over $2 a bushel now. So that's something that definitely shows you that some weakness in that one class of wheat. But again, at this time frame, it might be just enough to get the shorts a little more anxious, that bring some value into the wheat prices overall. But again, just see how next week goes after a good week, like a good close like we had today.
And if wheat rallies, obviously that helps out the corn market. And we saw that kind of in spades here today. So talk about corn going forward. Do you anticipate, first of all, I should ask you, was wheat the only reason that we didn't see corn down more with this really bearish ending stocks number, or was it that we had priced in a lot of it going into this report?
I think we had a lot of it priced in, especially on the old crop side. I think the market was pretty comfortable that we were going to see some form of demand adjustment. We did 75 million bushels off the export side. Did take carry out a little higher than we anticipate. But, the cash market is still very, very good on the old crop side. And then, we saw that with some of the bull spreading, buying the July over December, given the numbers today. But you look at the report, the backside was extremely heavy. We got 2.2 billion bushels of carryover projected. That's a massive jump from where we were last year. And that was even done with a 375 million bushel bump in the feed and residual use, as well as a bump in the export side. So that makes you even question that right away a little bit, especially given that South American crop coming at us here in the next few weeks. And that's going to have a long tail that will probably weigh on our export market or our prices well into the summer.
All right. So wheat's only going to hold us up for so long. And so you believe that, at least in the new crop, there's probably some downside risk coming.
Very much so. We might be in a window here that we have very little risk in this market. Maybe we start pricing a little bit of weather concern, even though things are very, very good at this time frame, at least across the majority of the corn belt in terms of planting pace and friendly weather to get this crop started. But it's still the 12th of May, and we're basically pricing in what we would classify as a record crop or a perfect crop. So there's a lot of windows in there. But right now, with the numbers the way they are, the market mindset where it is, as a producer, I would take any advantage of anything that's to the upside as an opportunity to get some sales going or build some defense under this, because the downside window looks pretty heavy, especially if those demand numbers are still inaccurate.
Let's talk about soybeans because ending stocks grew or will grow, it looks like, from USDA's estimate by about 130 million bushels with this new crop year. And so where do we need to be priced to price that in, especially with a big Brazil crop on top of that?
The USDA put next year's bean price around 12.10 a bushel today. So that's, we're kind of already in that ballpark when you start thinking about basis levels. Charts closed down the lower end of things today through some key support levels. So it looks like we got some more openings to get things moving a little bit further to the downside. Again, we're looking at a fairly big supply. Going to have another large crop coming from South America. That's going to have a long tail in our market plan. So obviously we got a lows maybe back into that sub 12, 1150 window. Wouldn't be out of question here, especially if things continue to progress very nicely in the planting pace, or if we see anything slow down the corn side and make me get a few more bean acres generated.
Do you think corn and soybean production, though, might have been the biggest print today that we see just because we may not get all the acres planted, and we certainly don't know what the rest of the crop season is for yield? Those were some trend line yields. It's pretty hard to get to that number.
I agree. We haven't seen trend line yields for the last handful of years. Like I said, this could be the worst case scenario today in terms of where we are. And again, with these report days, the headline traders are moving around today. Monday we'll come back. Let's analyze where we are and see how the market handles the information here over the weekend. Hopefully that is the case, that this is the biggest picture we see for both corn and beans going forward. And, we can at least see some support in this market. But again, I still think rallies, at least until proven otherwise, in terms of an actual change in the picture, are still going to be pretty shallow and pretty limited, and probably still need to be defended at this time frame.
How much is this outlook going to help boost the feeder cattle market? And if feeders are the leaders, will we continue to see live cattle futures get a boost as well?
Yeah, we had a heck of a close in the feeder cattle market this week. August feeders picked up $7.50, and fueled by this break in the grain prices here. And, we keep talking about those tight supplies that are out there. Now that the input cost comes down, that just maybe fires up that feeder market a little bit more. So maybe we get ourselves another rally, or at least a retest of the highs in feeders here. And that's probably going to pull the live cattle right with it, just because of that cost relationship. So we'll have to see how next week goes, but definitely strong closes in the cattle market today. Again, getting triggered by those cheaper inputs being put out there by the USDA in that report today.
Yeah, the one last key, though, is we need cash trade to turn, don't we?
Very much so. We're at a window here where supplies have kind of backed up a little bit, and now we'll see if we can things tighten up as we move forward. Again, demand is still pretty good. Retail values have been fading, but they're holding in there. So if the demand picks up, cash market stays firm. We're still running at a discount to the cash market on these front month live cattle prices. So maybe we just need to narrow that gap up.
Absolutely. Thanks for joining us, John Heinberg with Total Farm Marketing. That's Markets Now.